Hello and welcome back to Bunnex Investment Group. In this video, we are going to talk about one of the most important trading concepts that we use in our trading method. So I'm sure you've seen in our free Telegram channel that much of the anticipations that we make actually comes to fruition. So this is all by getting bias in counting of levels. In this particular video, I'll teach you how to count levels from the higher time frame down to the smaller time frames, and you can as well learn more in our Becoming a Seven-Figure Trader. I'll leave the link in the description box below. Without further ado, let's jump into the content. So we always say whenever you are trading, you need to start off the higher time frame. If I ask you where is the market going to move next from this particular point where we are right now, you will actually guess whether it's going up or it's going down without knowing the magnitude of that particular move. So I love to start on the higher time frame so that I get sufficient bias over any direction that I would have taken. So firstly, we need to start off on the higher time frame, which is the monthly time frame. Before we continue, please join our free trading community where we share free signals, free trading advice, as well as setups. The link is right down in the description box below. Be part of the winning community. On the monthly time frame, it's basically a time frame to give you what we call a datum, basically to see or know where the market is going to move next, or to get the rightful point of starting your analysis. When we are talking of levels, we are actually implying to impulsive rises or drop. In this particular case, this impulse is actually a level. This impulse is a level. This impulse is a level. This impulse is also a level. So a level is basically an impulsive move to the upside or to the downside. If you have been following this channel for quite a long period of time, you know that we deal with what we call a market maker cycle. 3 impulses in one direction will lead to a market reversal. If there are 3 impulses in one particular direction, say it's up, you get 3 levels of the H1 time frame, you will expect to see a peak formation high where we will get a reversal. So with that concept, we are going to apply it from the higher time frame. This is the law that is available to us on the monthly time frame. So the monthly time frame, we are done. We have obtained the datum. Next, we are moving to the H1, to the weekly time frame. From the weekly time frame, we do not see anything different from what we've seen on the monthly time frame. Therefore, we will actually jump to the daily time frame. From the datum, which is this one, on the daily time frame, what do we see? We can now see impulses. Impulses in this particular case, we have the first rise that was issued, the second impulse that was issued, and then its consolidation, and lastly its last impulse. What can we see in this particular move? We can see there are 3 impulses or 3 levels in one particular direction which led to a reversal. This was actually a peak formation high of the daily time frame to the reset point. In this particular video, I will not talk much on how to get these reset points or reset structures. So resets are basically cycle restart. We'll start again to count from that particular reset. So we can see there was a multi-month W pattern that was issued, and we started the first impulse from that particular reset. So this was the first rise to the upside, and then after that we had another restart of the next impulse, which was issued as an inverted head and shoulders. Head, shoulder, shoulder, and then we are on our way to start the next impulse to the upside, like that. So we also say when we get one daily level like this, we expect to see 3 levels of its preceding time frame. In this particular daily level, we would expect to see 3 H4 levels within that particular daily level. So to verify if we have been counting our levels correctly, we just need to switch to the H4 time frame to verify what has been happening. We can see there was these levels within that daily time frame. We had the first one, first H4 level, second H4 level, and then the last H4 level. Within each H4 level, we would also expect to see 3 H1 levels. If you can look closely, you can see these segments 1, 2, and 3, right? So from there, we are still on the we want to see where we are within our cycle. So we've said we are at level 2 of the daily time frame. If we look, we can see this is how it looks like. We had 3 levels to the upside. We are now working for 3 levels to the upside like that. So where are we going to make the entries? We can now switch to the H4 time frame to see if this daily level has been completed on the H4 time frame, right? So we are going to say we had 1 H4 level, 2, and then the last one, which is 3. Reset. We start again, like 1, 2, and then the third one, which is 3, like that. So if we are now to find an entry, it means this is a cycle restart which can be seen easily on the H1 time frame. So on the H1 time frame, we have a peak formation low. We have actually moved to the upside. So where is our entry going to be? Our entry in this particular case is going to be at the cycle restart of the M15 time frame, which was this one. This was actually a perfect entry where we had a W pattern on the 200 EMA in line with the market maker levels. So this is actually a summary of how we count levels. Much of the stuff is actually discussed in our programs. You can sign up to be part of the 7-figure traders program, which is going for $115 per month, and know this concept inside out. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.